BlackBerry shares have jumped this morning. Now, of course, the company is in play on cybersecurity, very popular among investors right now, but also the Internet of Things, whereby more and more devices are connected to the web. Without going through a computer. We're joined now by Grant White, portfolio manager and investment advisor at IA Private Wealth. Grant, great to see you. Would you be a buyer of BlackBerry with new money right now?
Yeah, I mean, this is a really great report they had and increasing forecasting. And so, I think BlackBerry is actually really well positioned for the world that we're in. And in saying that, we're still not a buyer just as of yet. I think that it's a bit speculative still at this point as to see where BlackBerry is going to go. But in saying all of that, I mean, if you do want to be speculative, I think BlackBerry has a lot of good momentum. I think they've got a lot of good things going for them. And it's really nice to see this Canadian story try to make this turnaround. Finally, I think we've been waiting for this story for decades now, it feels like. So it's nice to see BlackBerry making some good moves. And I do think that they're well positioned. So if they can continue to execute and they continue to do well, and then I think we would be a buyer down the road. But at this point, it's just a bit too speculative for us to see where it's going to go.
The turnaround, we heard a pretty similar analysis from Canaccord Genuity earlier on the show, that it's a turnaround story and that uncertainty makes you cautious.
Yeah, exactly. I mean, I think at the end of the day, I mean, we've been, like many Canadians, been watching BlackBerry very closely for the last number of years and wondering how this company is going to make a go of it. And I mean, they're scrappy, obviously. I mean, that's what they are at this point. They've become a very scrappy company. They have grinded their way through this, and we think that they might be finding their niche at this point, which is great. And if they're able to execute on these current plans and continue to gain share, then I think that BlackBerry is going to be a story that we're going to continue to talk about for years and years to come. They're very well positioned. I mean, you pointed out the Internet of Things, security around those things is incredibly important in an incredibly more dangerous world, if you will, as it comes to those that type of stuff. So BlackBerry is very well positioned for that. And so I'm optimistic on BlackBerry, but I'd like to wait a little bit longer to see how they perform and before I say it's a buy at this point. But if you own it already, I'd hang on to it.
Rogers Communications competes with our own parent company, BCE. TD Cowen has named Rogers as a top pick. Would you be a buyer of Rogers right now?
We're I would say a hold on Rogers, and it's not because it's a bad company. Actually, I think for a lot of the same reasons, Rogers is well positioned as well. I think they could gain more market share in mobile going forward. It's a well-run company. It's very stable. I mean, I think from a cash flow perspective, they look good. From a yield perspective, I think it's north of 3% dividend yield at this point. So it's a decent dividend yield on this company. Where I have problems with Canadian telecom is generally in the growth story. And I just don't see a whole lot of growth opportunity with a company like Rogers at this point. So it's a good, stable core dividend holding. But at the same time, I think there's better growth opportunities out there, particularly in the energy space and some other Canadian holdings. So we're not buying it. It's solely because I think there's better opportunities. But it doesn't take away that Rogers is a great company. And I think there are some good opportunities for a dividend investor.
We are due to hear directly from TD's analyst, Vince Valentini, on why he's keen on Rogers, and that's set for 10:30, so not far away. We're going to get some more stock ideas for you after the break, but what is your view on high-yield stocks right now? I'm thinking about utilities and pipelines. Are you interested in that area?
That you got to be very careful with some of them. I mean, one thing we're very keen on is how are they generating those yields, right? And I think that there's a lot of dividend traps out there. So be very careful on debt, especially with some of those higher yield producing assets. We've come across a lot, and it seems to be every second sales pitch that comes into my office today is a high yield producing asset. I'm very careful on the debt as it relates to those, just given where interest rates have been and what the stability is of the company or perhaps the holding itself. So be very careful on it, but there are some really good dividend plays out there. And something I am more keen on is actually looking at not just the dividend yield, but when you factor in the share buybacks of certain companies. And when you combine those two together, you're getting some very interesting yields from some not so common dividend companies out there right now. And so that's another area where I think if you have a really healthy company and there's good share buybacks, I'd actually be more interested in that today.